You've had some time to look at the statement. Danielle, thoughts?
Well, it's interesting because, Nick Timmerman of the Wall Street Journal published at 9 o'clock last night Eastern, basically previewing the two dissents to come, meaning if they still changed the language of the statement, then he's appeasing somebody else who also wanted to dissent. My guess would be that would be Austin Goolsbee of the Chicago Fed, but they did change.
Is Goolsbee normally a dove, or does it?
Chicago's always a dove.
Okay.
So if he's not, he's having an out-of-body experience. But they did say continue to expand. They got rid of that, and they said that the economy moderated. So they definitely toned the language down. And again, every single word of these statements is parsed over very carefully. So that language was changed for somebody.
Anastasia, you zeroed in on that too, the moderated thing. What exactly is the Fed? Is the Fed giving themselves cover to say, okay, is this the slight pivot that maybe bulls were hoping for, and anyone else who wanted to see some relief from the higher rates here?
I think that's exactly what it is. It is a pivot. It is opening that door ever so slightly. Charles, if you look at the GDP, despite the headline print that was really strong, you do see, for example, fixed investment that was really sluggish. And I think some of that had to do due to business confidence being also sluggish. The other thing, Charles, I really noticed in the statement is this notion of uncertainty that is elevated. And so I'm really going to be looking forward to how does Powell characterize what can happen to bring uncertainty down. One interesting thing is if the tariff charge back in April was about 3%, then now I think we're assessing that somewhere 6 or 7 or 9% is the actual tariff that's being charged. Now that we got the slew of deals done, we are likely to see that 15% tariff. Right. So I assume the uncertainty that he wants to see alleviated is what happens to inflation when we have the full 15%. Right. I think there will be offsets, but that's the uncertainty that likely focuses on.
To your point, though, we know the number. It might be higher, but we know the number. The uncertainty part of it, we know we're getting more certainty. You may not like the number, but we're getting certainty. All right, Brad, we've got his audio fixed. Brad Thomas. Hey, Brad, thanks for joining us. Again, I want to go back to what I was saying. Jay Powell, this sort of restrictive policies, this restrictive Fed fund rates, is that harming the American dream in your mind?
I think it is, Charles. I think not only the American dream, but the corporate dream. I mean, housing market is really sluggish. Pending home sales are down 13-year lows. Mortgage rates have come down, but still it comes down to affordability and just mainly the enter buyer, the new buyer of homes is really struggling. So, the way we're playing that trade is obviously in the rental side. But in terms of buying a home today with rates where they are, I fully agree with Trump. I think he said something one time, you never get rich when interest rates are high. And I think we definitely need that elevated cost of capital to come down, not only for American citizens, but for corporations. And that is going to be, Charles, really what I consider to be the last piece of the puzzle for the golden era. We do, as your previous guest alluded, we do have a lot more clarity over tariffs right now. Obviously, we have more to go. There's more risk on the table. But I think that last piece of the puzzle is definitely going to be a rate decrease, which is going to stimulate the economy. And again, let's not forget the big, beautiful bill has passed. So we certainly have a lot more clarity and a lot of benefits that come to Americans and corporations with this big, beautiful bill. So, I absolutely agree. I think rates definitely need to be cut. And I think that's going to stimulate consumers as well as corporations.
Is there a sweet spot, Brad? Is there a number that you think that we could comfortably go down to right now?
I'd like to see kind of a drip campaign. I'd say a quarter, and a quarter. I think that certainly makes sense. Starting in September. And that is going to unlock, as you know, Charles, I'm a real estate guy. That's going to unlock tremendous value for real estate investors, both in the private sector as well as the public sector.
Hey, let me shift gears here, because one thing you've been very vocal about the media is misinterpretation of the intentions or the intent of Trump's tariff war. And the bottom line, you're saying he hasn't been trying to end globalism. He's just been actually trying to make it better for Americans?
Yeah, I think so. And look, I mean, I think, Trump's already halfway there. I think your previous guest even alluded to this. 3 out of the 5 major trading partners were out of the way. I think Trump just crushed it with the EU. And so, look, we're more than halfway there. And again, a lot of that risk is off the table. I'm definitely still concerned with tariffs and what could potentially happen, Charles. But overall, I think President Trump has actually played this extremely well. And in terms of tariffs. And so, again, I think the last piece of that puzzle is rates. And once that is going to unlock the golden era that Trump refers to. So Look, I'm extremely interested to get this rate cut, just like Trump. I think it's going to unlock a lot of capital for investors, and certainly reduce the cost of capital for many corporations as well as our country.
Yeah, those
cost
interest
of capital.
rates.
So this is absolutely important.
There's no doubt on the interest rates that we'd all like to pay less than $1 trillion a year. Hey, Brad, thank you so much, my friend. I want to bring back our panel: Daniel DiMartino Booth, Anastasia, and Marissa. Okay, so Jay Powell, Anastasia, has been the worst modern Fed president of the last 4 Fed presidents with respect to FOMC day and the stock market reaction. We got a little bit of a bid in the market now going into this. What changes? What do you think? What do you think the market? Why are we a little up here just a little bit a minute before Powell speaks?
I think the expectation is a bit up somewhat that he may actually opt for a rate cut in September. You know, what could ruin this and spoil this into the close if he really pushes back and says we need to be patient, we don't have any incentive to move, the economy is fine, the labor market is fine, the inflation is elevated. I don't think he's going to say that, but that could potentially spoil the rally.
Danielle, I know you don't like that he's been pushed around here, even though you don't like what he's done recently. Still, he's going to be asked a lot about President Trump and others. What do you think he's going to say?
I think he's going to be as curt as he's been in the past and cut off the reporters as he's done before. I'm going to be focused.
Has that anxiety helped, though? Has it helped or hurt?
It really doesn't matter, because
Okay.
what matters is he's in control of the discussion. But what they're really going to press him on is whether the dissent is deeper than just 2 individuals.
Right.
Because only 11 voted today. Adriana Kugler was out for personal reasons, so 9 of the 11 did not dissent.
If it is deeper, will that influence him?
Well, yes, it will.